So today is day 5 or day 1 of week 2 of becoming a professional day trader as a brand new day trader. So my name is Ryan. I created this channel. I'm doing this series so I can show you what it's like in my experience and my journey of going from brand new, having no experience day trading whatsoever. The only experience being that I've done it 4 or 5 years ago and managed to blow up an account on Robinhood, just basically trading based off what people were saying in the chat rooms and not really using any real strategy, just kind of following hype and then fearing I was going to miss out and jumping into positions I never should have got into, knowing what I know now. We learned something interesting today. And what we learned had nothing to do with the stock market. We learned something that's quite annoying. We learned that my screen recording software only allows me to record up to 60 minutes. And when that recording automatically ended, it wasn't able to transcode it. So I actually lost all of the live trading footage that I had for today. But that's okay. I'm going to dive into my screen and I'm going to give you a quick recap of everything we were looking at, everything that popped up on the scanner, what we knew about it, and why we were looking at it. But at the end of the day, nothing perfectly fit our criteria. We have a scanner that we watch every single day, and that scanner is looking for stocks that are priced under $20. The other thing I'm looking for is stocks that have gapped up 10% or more on the day. So I'm looking for something that's moving, something that's actively trending upwards. The other thing I'm looking for is relative volume of 3x or greater. And I'm also looking for a float of under 20 million shares. Now, the reason I'm looking for these things in particular is because the stock market is supply and demand. That's one of the things I've gathered and one of the things I've learned doing the research before actually getting into this paper trading experiment. And to me, supply, right, which would be the float, I want that to be low, but I want the demand to be high. So if it's already moving, the relative volume is high, the availability of shares is low, and there's some kind of news catalyst. That's exactly what I'm looking for. That's exactly what I want to see. I'm going to take you into my screen. We're going to look at the watch list for today. I'm going to explain to you why I didn't take any trades on any of these positions, and I'm going to explain to you what my thought process was going through it. All right, so here we are. We're in Thinkorswim. This is the platform that I'm using to do all my trading so far. This is the paper trading simulator that we are in. We had 4 of them pop up in total. So NUKK, LGHL, MDAI, and HUMA. Now, looking at these, right, this was the very first one we saw. So we look at this chart and we see a massive gap up in the pre-market. So this gapped up from about 36 cents all the way up to 68 cents. Now, the problem with this is it's way, way too low. So I'm just not going to trade it. I don't want to trade anything whatsoever under $1. I've taken a couple positions last week and the first couple days on stuff just under $5 where everything else fit the criteria. Not looking to trade something that's cheap. I've seen more bad things about that than good things. So I'm not looking to deviate from the strategy whatsoever. But watching this, what we saw was a huge gap up and then a sell off, and we sold right off to just above where we opened. And then we just consolidated all morning. The entire pre-market, we just kind of sat here. We didn't make, we made a slightly higher high, but that really didn't tell me anything after we just kind of stagnated for the rest of the day. So come market open, I was watching this. And as soon as this sell-off happened, I says, okay, this is probably not going to be something that's going to give us an opportunity. We're below both moving averages. Volume's really high on this sell candle. The 5-minute wasn't giving us anything favorable either. And it's just going down. And when it comes to trading with the trend, right, if it's trading flat, that's not a trend I want to trade. So that would mean no position on this. But if it's trending down, I don't want to try to trade against the trade. So this one was immediately out because of that. Now, the next one we looked at was LGHL. And again, we're trading at 40 cents. And when I initially started watching it, we were somewhere right up in here and we were a little higher than that, but we were actively trending down. So again, we saw this massive pop up at early pre-market, like 4 o'clock. 4:15 in the morning is when it reached or 4:09 actually, my time on Thinkorswim. For whatever reason, it's not showing my local time. It shows it up here, but it doesn't show it down here on the actual charts. Don't know why. I can't seem to make sense of it. But we saw this massive gap up. And then again, just like the other one, a pullback. We saw another little step up. So maybe in here, it looked like it was going to maybe continue the uptrend, maybe see another leg up. But we didn't get it. We saw, and I wasn't even watching the chart at this time of day, so this was all in hindsight. But we see a sell-off. We see lower highs, lower lows being made. Then we see what maybe looks like the trend reversing. This is kind of an anomaly to me. I mean, we have these 4 massive candles, 4 in a row, and then 2 more smaller but still larger than these candles. And this to me, this isn't an opportunity. This just happened so fast. This is like so much indecision, this massive topping tail. If even if I was watching this actively, I don't know that I could trade it, just because we're not coming off of any kind of clear pattern, right? We're seeing a little bit of up and then a lower high, and then right. So if we were to get into that, I would have maybe expected, okay, this is going to pop back up here. If we see the break of this, then maybe that could be a good sign. And we could have gotten in and did that, but then we would have immediately seen, a big old drop. It's also right, when we look at the price, we're going from 48 cents up to 57 cents. So nowhere in this move, even if we got here, my profit target is going to be, between 15 and 20 cents a share. We're not seeing that much movement here. So I can guarantee you that if I was watching this live, I would have sat this out. The only thing that would have suggested I should get into this would actually be emotions, because again, we're trading against a trend. And then even after that happens, we just continue to go down. I watch it at the pre-market, at the market open, at the opening bell, just because I've seen trends change, right? Some of the stocks I've been watching, and one of the trades I actually won on was a big gap up at market open. So that's kind of one of the things I'm watching for. But again, I don't want to do that if I'm trading against a trend of a stock just going down. I'm looking for a stock to go up to make a profit. I don't want to trade a stock that's going down. Now, looking at this now, right, it is potentially, right, we have a low of day here at 38.50, and we have a slightly higher low at 38.95, 38.90, right? And we're talking cents here, and we're talking fractions of a cent. I'd have to see a consistent trend up for me to consider taking a position on this. Plus, when we look at the daily chart, this is just totally just flat and going down. So I'm not really seeing an opportunity here that's worthwhile, that's worth taking. The next one we looked at was HUMA. Now, this wasn't something that popped up on the scanner, and you can see my alert is actually still here. We're going to go ahead and take that off. We watched this because it showed up in one of the chat rooms. Now, this was a really interesting concept I talked about during the original recording, which was that it didn't pop up on the scanner, and that's because the float was way, way too high, and the relative volume was really good, but the float was just like 75, or no, it was like 90, 91 million. So that's just too high. That doesn't fit my criteria. And again, brand new, never done this before, no positive track record except for what I've done in this series alone. And I'm not looking to take any trades that don't fit the criteria, don't fit the scan. So I don't want to jump into a position and just start getting FOMO or getting emotional and losing money and taking away the data that could potentially be proving the strategy as worthy, as something that works, the strategy that I'm using. So if I just start taking emotional trades that aren't based on the strategy, then that's going to corrupt all that data. And now I can't really trust that data when it comes to actually funding an account and taking real trades. But we watched this anyway. And this was interesting because there was a lot of people in that chat room. And this is what got me some odd years ago, was that I was watching a lot of chat rooms back when I was still working a 9-to-5 job and when I was clocked in by 8 in the morning. And I was pretty much just scrolling through a chat room real quick, seeing what was trending in there, and then taking a position based on what other people said, right? And we see a lot of the same thing even still today, especially on this chart. We saw a lot of people saying to the moon, hold bulls and stuff like that. And that's not a technical indicator. It's not even a fundamental indicator. It's not news. It's not anything. Right now, a lot of these people do report the news, and they do have fundamental reasons to maybe take a long-term position on some of these stocks that are starting to move. But for me as a day trader, I'm looking to get in and out. All of my trades so far have been under 10 minutes long, and they've all been green. So again, I'm not looking to deviate from the strategy. I have very specific signals that I look for to get in and to get out, and there's other technical indicators that I'm following to make those decisions. Now, looking at this chart, right? Obviously, there's a big leg up as soon as the market opens. So this, as soon as you see, right, we look at this, we see a trend up, not a lot of volume. It's kind of choppy, but we see a trend up. And as soon as we break this pre-market high, that's potentially a good entry, right? We break the pre-market high, wait for the pullback, and then get in on the next green candle. And that's right here, right? If we zoom in on this just a little bit more, that's going to be right about here. That's going to put us at about $5.60, $5.61 a share getting in. Now moving up, Our exit, right? Our stop loss would be below this candle, right? We could choose 550, 551 could be our max loss, a 10-cent max loss, which makes sense because you want to have a good ratio, right? You don't want to potentially be going down to 514 and you're only looking to maybe gain 587. That's why I like the break of the pre-market, the pre-market high, or the break of the previous high, which was within that trend, because now we're showing some potential to keep going up, potential for some really, really good growth. Now, in hindsight, looking at this, obviously we weren't watching it. So we can see if we followed our strategy to a T and we were watching this, would this have resulted in a good trade? And the answer is yes, because we would have gotten in at 560. And then as we ride this up, we don't have a sell signal until right here. So that would have gotten us out at 616. But keeping in mind our profit target, we would have gotten out with some chunks of profit selling parts of the position at 575, right? So probably right here, I would have felt really, really good about taking some off the table, especially seeing this little bit of a pullback. I know some traders would add here. And then the other thing I'd probably be thinking to myself and doing is we see this little bit of a bearish candle here after this indecision. Well, maybe we're not going to continue the trend. Maybe this was just market open volatility and this is going to go back down. So as soon as we got back down towards, right, breaking a low on this candle, that's when we would have took the rest of the position out at our max loss, or we saw a candle make a new low. We could have potentially got out there. But we wouldn't have seen that. We would have stayed in because the chart, the price action didn't suggest that would be the decision we would make. Volume's still increasing, right? We saw a dip in volume and during this indecision, but when volume comes back up, we take another leg up. So that's good. And our exit wouldn't have been right up till right up here. So, and who knows if we would have still had the whole position by then. I mean, because I'm not looking to be greedy either. I'm following the strategy to a T, but if profit's good, let's take it and get out of there. So that's how that move looked. But that obviously, when we were watching it, wasn't until after this leg had happened and we were down right in here somewhere. So we actually watched this move right here. The reason I didn't take it, and I'll tell you why. We saw a lower high and we saw, right, we're seeing flat, we're seeing support there. I don't like to trade off of support. I like to trade with a trend. So I didn't see a very strong signal of entry right there. I also saw we broke below this VWAP. This VWAP line here could be potential resistance. So what does that give us, right? We're looking at 578 to potentially 588, not even enough to hit our profit target. This is something we were able to see at the time of watching this chart. And then we pulled back. So now we could potentially have like an ABCD pattern that would form, and we could have went back up. But even if we did, how high are we really going to go? 617. Now that is enough for us to hit our profit target. But at the same time, we're trading a little bit against a trend at this point, right? There's a lot of weakness showing. And I was also looking at a big sell order on the level 2 that we'd have to break through. And I believe it was like something in the range of like 20 or 30,000 shares. And then I think it disappeared. So it might not have even been a real position. It could have just been like a spoof or something like that. But it was looking like there was quite a few indicators suggesting that we shouldn't get into it. Couple that with the fact that the float is so high that I couldn't take the position. It wasn't an exact fit for the strategy. I didn't want to be an emotional trader. I had to follow my criteria. Didn't take the position. So then after that, we had MDAI actually pop up on the scanner. And this is something we were watching right as this little breakout happened here, this little jump from 202 up to 208. Now, this didn't pop up on the scanner until that moment. And that's because we were at $1.83 at open, and we were at $1.82 in there, saw a high of $1.85 in the pre-market. And then it had gapped up to that point, which made it hit 10%, which meant it made it onto the scan because it hit that criteria. The other things we're scanning for, which is the relative volume, that was only 3.5x, so it just barely made it. And then the float was like just under 18 million. So that just barely made it as well, looking for under 20 million. So we really didn't have a very, very strong, it's not like it was way down on the float, down like 1 million, like some of the other stocks we've been winning on. And the relative volume was huge, like 20x, 30x, 40x. It wasn't, it just barely made it. And it's not moving a ton, right? Percentage wise, it is. but it's just not moving a ton and it's under that $5 mark. So while this is a really good trend here, there's no reason to have been watching this in the pre-market, right? Why would you hang out and watch that, right? There's just no activity there. But then once we get the leg up, it starts to get some attention. Now we have a little bit of a trend that we could follow. But by the time we got to it, we were looking at this, and yes, this is an entry, but also keep in mind we have this high here. I kind of really wanted to see this high break, and then it did. And I was going to maybe take an entry, but I decided against it just because it didn't fit the criteria. I really wanted to take an entry. I was really like hovering over the button at that point, but it didn't fit the criteria. And I said, no, I can't do this. Even if it's a win, it's an emotional win. It doesn't fit the criteria. I cannot trade the stock. And it's actually it's not all that bad, right? That worked out in my favor. Not being emotional worked out in my favor because I wouldn't have seen much growth, right? Profit targets 15 and 20 cents. So getting in at 204 or even 205, and this move happened very quickly, by the way. This was kind of like a breakout. We only went up to 208 at this point, and then we came back down. We dipped below what our buy-in would have been. We came back up, tested it again, got rejected again, and you probably would have resulted in maybe break even or a small loss. So it wound up not being worth it, and not necessarily because of the technical indicators on the chart, but because it didn't fit the criteria we set for ourselves going into this challenge, going into this experiment. So we didn't trade this either. We have made a new high. It might be interesting if it makes another new high, but again, it's just not seeing the moves that we need to see here. So that's how our day went. We spent the entire morning just watching these charts, looking for potential opportunities. Market wasn't really talking a ton this morning. There was other movers that were well above the price range. Again, it's outside the strategy. Those are probably a little safer than some of these penny stocks, to be honest. If I were to raise the price cap of the stocks that I can get into to maybe $30 per share or $40 per share, that would certainly open up our opportunities a little bit. But again, it doesn't fit the criteria that was initially set, which was based on all of the things I've been reading and looking at and the videos I've been watching and all the self-educating I've been doing on this particular topic. So I'm not really looking to change anything about the strategy until we get some consistency with it, because right now we're consistently green. Right. I'm going to take you over to my spreadsheet in a second, and we're going to see that every single trade I've taken so far in this challenge is actually green. And here it is right here. So this is something I've been using to track every single position I've taken. So you can see on 6/24, which was the very first day one of this challenge, we wound up being up to about 28.80 in total profit with the positions that we took on day one. Now, day two was one position as well. And we wound up getting up an additional $6,500 there to $9,300 in profit, which is incredible. Day four, this was day 1 and 2. Day 3, we didn't take a trade, but day 4 was the 27th. And that we profited, again, another about $1,400 between getting in and then getting out within 2 minutes, but selling half the position and then selling the remainder of the position a little bit further into the movement. And then, of course, Friday, I wasn't able to trade, which I think also makes this experiment a little more realistic because not everybody who's brand new is going to be able to come in and trade every day. So I have a regular day-to-day life outside of this, outside of YouTube and outside of, trading, obviously. So I can only dedicate a certain amount of time every day to trading. And there's some days I won't be able to. Most people that might be working a regular job where you got to be clocked in, sort of like I was when I first started trading. I do have a bit of an advantage because I can make my own schedule. So I'm able to adjust that based on some of the things I want to do, some of the extracurriculars I want to add in. But I think it makes it a little more realistic when there's days I can't trade. Sometimes we're watching professional traders and they're in the market every single day at the optimal times. And that's because they're professionals and they're doing it full time. So they can do that and they should do that. And there's no reason for them not to do that. But for somebody who's brand new, that's learning, that's not relying on this for their income and can't rely on this for their income, they got to still rely on their regular income source, their job. I think it adds more realism to the entire experiment that I can't trade every single day. I also think it adds a lot of realism that I'm not taking trades every single day and I'm not using the emotion. So you can actually see if this strategy that I'm using based on the information I've collected is going to allow me to create a desirable result where I consistently turn a profit or at least have green weeks. And that's ultimately my goal with this series, is to get to a point where every single week I'm green, or most weeks I'm green. And once I see a lot of consecutive green weeks and a lot of promise in the strategy and a really good level of accuracy in my own trading, and I'm feeling very confident in that, at that point, we're going to leave the simulator. We're going to fund a real Thinkorswim account with enough funds to not deal with the PDT rule, and we're going to just start trading, and we're going to see what happens then. Now, obviously, putting real money on the table changes things. Emotions do get stronger. It's easy for me not to take emotional trades when I'm not trading real money, because at the end of the day, it doesn't change anything anyway. All it does is allow me to collect data and allow me to prove that my skills are working. But we're going to see what happens. We're going to cross that bridge when we get to it. So that's going to cap this video off. So thank you so much for watching. If you want to continue watching this series, I'm going to be uploading every single day. Every single trading day, every single day that I trade, I'm going to upload that footage. And like I said, ideally, it would be live. I'm going to show you the trades live. I have my screen recorder going while I'm watching the market. But because my screen recorder cut out on me at the 60-minute mark, I lost all of that footage. So, and I didn't realize it because I was watching the charts. So I didn't know that I wasn't recording anymore, which really, really sucks. But I'm learning new things every day. The series is going to get better. YouTube's going to get better in the same way that my stock trading is hopefully also going to get better. So if you want to keep following along this journey to see what happens, to see where I end up, see if I'm cut out to be an actual day trader, then make sure you subscribe to this series and you leave a like on this video because it helps the algorithm a little bit. And check back tomorrow because I'll see you on the next one.